Hey, good morning. This is Vance, and it's Wednesday, May 18th, 2016. To get started today, let's review a couple of things I've been talking about for a while. A few weeks ago, I told you there was likely going to be a push to get oil to around $50 a barrel. This is because at that price, it makes sense for U.S. oil producers to work on getting it out of the ground. This in turn creates more jobs, right? As long as we stay between $50 and $65 a barrel, it probably won't impact the economy in a negative way. It won't cause a slowdown. So I think this is a good balancing point. In terms of the larger market, the most important factor is stability in the global financial markets. This goes back to, when everything almost collapsed, the kind of precarious situation with the massive derivatives and just interdependent investment in general. But what this means, the reason why they do this to keep it stable is because one currency cannot be allowed to appreciate or depreciate too quickly. This just upsets the balance. Now, last week I told you that the U.S. dollar had dropped quite a bit, and it was probably time for more serious talk to move towards more European negatives and more U.S. dollar positives. And so we're totally there now. So the dollar is getting stronger, but the GU this morning is obviously moving the other way. This is likely due to the Brexit issue. But by and large, the sentiment is clearly in favor of a stronger U.S. dollar right now. That doesn't mean that's where we're going to be a month from now. Okay, so let's start with the pound dollar. First of all, you can see that price made a move up in here. We would have had this boomed up through here. So where this normally would have encountered a lot of sell orders, as this was flying up, moving about 100 pips in 1 hour, that would have discouraged some of the sellers to take positions here. So let's take a quick look. What we look for is an advantage, the strength of the advantage, and a way to manage the risk effectively. So let's drop down the 5-minute on this and see what happened at that level. Yeah, and you'll see it right here. Here's when it closed. This represents a change. By change, you can see that the buyers were unable to close above this, what is kind of a descending level. This is where all the buying and selling over a 30-minute period, the buyers weren't able to get it higher. It closed right there. Same thing here, a little bit lower, and then here. So when we cross that level, it shows us that there's been a change. And so when we drop down, I usually look for a 5-minute candle, clear close, no long wick. We got it right here. And this is almost always good for a minimum of 9 pips with a stop safely tucked away right here. So this moved, there's 36. It's gone up about 82 since then, making a bit of a move right now. So let's define that. I'll show you what we look for. If you've got my book, my free book, again, I don't have anything for sale. I mean, people can join the community for like $9-10 a month. But I just have it there for you guys to work together and me just to kind of keep the site going for you guys. I'm retired, but so my point is I don't have anything for sale. I'm not trying to get anything from you. So that book is free. I don't ask for an email address to get it. In fact, let me come back to that in a minute. So here's what we'll be looking for right here. So far, we do not have a 5-minute closing above, but at this point, when we're talking about trends advancing, so here's the trend advance, here was the former trend advance, here's the trend advance, and this is all in my book. Here's a little trend advance followed by a move back, and then it's trying again right now. So what we look for is a move, a pullback, and a second push. And so here you potentially have one, but in order to consider a trade there, that move is going to have to be at least 18 pips. Which it has been 14, but it's been 14 with a pullback, and the 5-minute candle closed right there. You'll see the relevance of that. In other words, the buyers and sellers in a 5-minute period are reconciling right there. They're unable to change this. And so the optimal target would have been here. So the pullback and the optimal target are identical, so the risk is not good. So you have to wait for another move from here up about 18 in order to consider a move, pullback, and second push. All right, I think that about does it for the pound. You guys can watch for that. Coming over the euro, you can see during the Asian session, we had a move down. This was probably on confirmations in the afternoon from the numbers, from the talk regarding, Fed policy. As you might recall, yesterday morning when I was talking, I was saying that the Fed could maintain that the economy was strong and they were on track to raise rates. And I was saying that the market just did not believe them, which they didn't. And they seemed to get enough information yesterday with the indicators to say, oh, you know what? The U.S. economy is probably doing very well. And so that's why we had probably a change during the Asian session. Now you see right here, just as it comes out, let's take a look at the first change. Now a change would be a close below this level, and you can see I've marked this out by looking at the 30-minute candle body closes, showing that here the buyers and sellers reconciled with billions of dollars over 30 minutes in this same spot, and same thing here. And so what we'd be looking for is a change in that, and we can see when that happened. Moving over here. Now the euro will be move a little bit different than the pound, so you got to observe and watch. But you got no close there. You got one here hinting that this was probably going to drop. Now, I haven't traded the Asian session in years, and the reason why is because different people, different culture, different ideals, they have different behavior, and behavior is the key to you anticipating what these guys are likely to do, and more importantly, the key to you managing your risk effectively. So I don't trade the Asian session, because it does move differently, but you can see that this closes here, showing that this is likely to dip down, and it eventually does. So if you were trading Asian session, well, put it this way, if you were trading now and this happened, you could have your stop just pretty much anywhere low right in here and you'd be fine. Asian session, you'd want to maybe wait for a better price because it moves a little bit differently. So that moved down. Now when price really takes off here, looks like that. Let's see if that had a pullback of 38.2 or more there. It did. It just barely did. So as you can see, what happened here, let me get my ruler. From here, price moved down about small move of 13, pulled back to 38.2, moved down about 6, pulled back to a little more than 38.2, pulled down here, pulled back, and so on. So there really wasn't a high probability, move, pullback, and second push trade in here during the Asian session. Then price just stalls. London opens, kind of right in here. They kind of went with the Asian session a little bit and then went sideways all morning. Now let's come back up to the 30-minute. And you can see that when this stalled, eventually price moves up to this last big move down and moves up to about 50%, where it encounters these sellers right here who made money here and now they're repositioning. And this is a place where you have a clear supply line here, which we talked about earlier, right here. And you have 50% corresponding. You have a strong trend. So you're going to pick up a lot of orders here. So this is sometimes good right in this area, 61.8 or 50%, where you can pop out a little trade here. And this eventually moves 20 plus. But if you're going to do a trade like that, you want to have your stop just safe in here, and then just go for a small amount you can with a good risk to reward ratio, which is 0.75 or 1-to-1. Now we're taking a second attempt at this level. Keep in mind that the pound is showing negative US dollar movement. So there's nothing here right now, guys. You're going counter trend, and the counter to the balance of money is to the downside, and price is moving the other way. The pound is probably the only thing you can look at this time of the day. I'm not sure you're going to have enough strength to make a move here. London, out of London, you got between 30 and 40% of all Forex transactions coming out of the London hub, and they're going to be closing in 30 minutes. So they might just go, you know what, let's take some profits off and call it a day. So you've got that factor going. Now, could it take off here? Sure, it could. If it does, then trade your plan. But I'm just giving you some factors that tend to influence the market depending on the time of day. Let me see what else. Let me just show you where to get that book real quick. forexartofwar.com, forexartofwar.com, and then just click anywhere on this this bar, and you'll see there's no email registration, just the book. I think you'll find this is one of the most valuable Forex trading books that you'll find in the world, because it basically encapsulates my 11 years of trading experience and working with others. So it's all in that one book. And you're welcome to ask me questions, send me emails, you know, cover topics, whatever. I'm happy to do that. As far as these sessions, just this last couple of weeks, I started to do them a little bit later. So, you know, it's Tuesday, Wednesday, and Thursday mornings, just a little bit later. And as I said yesterday, it's just so I don't have to get up in the morning. I did that for 12 years, you know, but I'll definitely share some insights, deal with your questions, and give you some, give you my take on what's likely to happen. So you see the pound's pulling back now. The euro is stalling where the 50% level is, and that about covers it. So if we were to, probably the best trade today, and it was at around 7 o'clock in the morning, was when we had this change over this level right here. That was probably the strong trending, clear advantage. That would have been it for me. So that's about it. This is Wednesday, so tomorrow we have one more session, and so I'll be back in the morning for that. In the meantime, for those of you who are part of our community, I will go and check and see what you've been doing, and I'll see you tomorrow. Bye, everyone.